Okay, thank you, Marlon, and hi-ho, everyone. Welcome aboard for another week of Trading Buddies. Thank you for being our trading buddies, and my big trading buddy will be with me shortly. Ash is obviously getting the late mail at the moment and potentially setting up an order for us as the week begins. If that isn't the case, then I'll see if I can find one here in the pound versus the US dollar as we wait for the open of London session. Okay, we'll update how this went last week. I think you guys were aware that on Wednesday, yes, we caught up to that on Wednesday, where we missed our all profit by 0.8 of a pip. Thursday, there was no trade because we were bang on the entry, and Friday, you would had to have gone short, and of course there would have been no entry there as well. So not a whole lot to get excited about last week. Let's see how this week goes. Right, this one, for those of you who are new, first of all, welcome to you. This is an attempt to trade the London Open on pound versus the US dollar. Now, the current parameters that I'm using for that is isolate the Asia session, and that there is the first candle of Tokyo, and this here is the last session of Asia, or more correctly, the last candle prior to London Open. So that's the range that we isolate. So we've got 6 candles in there, 2, 4, 6, and we take the range of the current bar and the low of that range from Tokyo Open. So we can identify that by going this way. There's the low. At the moment, there's the high. That could change, of course. And what we now need to do is find a midpoint, but I can't find a midpoint until, of course, we've got the absolute high of this range. So we've got to wait on that. How far have we got to go? About a minute and a bit. So if this closes above there, I'll move that to the high of this bar, and then we'll establish a midway point. Let me put it on the high at the moment, which is there. So the low of the range is 116.00. We know that. The high of the range at this very moment is 116.53. So that gives us 53 pips of range. Therefore, our midpoint is 26.5 pips. That's pretty easy today because I've only got to go from 0 to 26.5, which is bang on there. But it's now moved a little bit further, so look at it go. Looks like they're selling the US dollar at the moment. High of that at the moment is 116.56. Which is there. And hopefully it doesn't go any higher because I'll have to recalculate. 56.28 we've got to go to now for the midpoint, which is pretty close to there. Just waiting for that candle to close and the London session to begin. The high is still 116.57 now. What a son of a gun. 28.5 we need, which is about there. Now it's still going. High is 116.58 still. Nearly there, guys. 116.572. There we go. So 116.58 is going to be our high, which means 29 pips above our low, which means right there. All right, so what we do now is we're only going to trade this short And the reason for that is because we're above the center line. And that's how we work this. So if we're above the center line at open of London session, we trade short only. No need to think about the longs. And the entry level will be at 116.29. Our stop loss will be the high of the range, 116.57, 58, and our first take profit will be at 116.00. So I'll set that up. Now, again, if you've only been here for a short period of time and haven't or aren't aware that this is in very much test mode, then you need to take what I'm saying very seriously. This is not a proven system. So do not place any meaningful money on this. Just micro lot, fine, no problem. But please don't put any substantial amount of money at risk if you are going to try and trade this. Righto, the entry level was 116.29. And the stop loss was the high of the range, 116.58. Get rid of that take profit pips. TP1 is not 6 pips. It is at 116.00. And we don't take anything off the table at that point. We simply move our stops to entry. So it's a bit of a misnomer, the TP1 bit. All we're doing is moving our stops to entry and making this a free trade. So if price obviously comes back to entry, then we get taken out for no penalty. TP2 is 2.5 to 1. In this case, our risk is 29 pips. 2 times 29 is 58, and a half of 29 is 14.5. So let's say 72. 72 pips. That will be our TP2. 72 pips from entry. I don't like to use an amount of pips. I like to use the exact level. 72 from there is going to be, what, 43 off, so 57, 115.57. $1.1557. There we go. And we close the whole shoot and match right there. So it's a sell. And there we have it. So if you want to follow it, the entry is at 1.1629. The stop loss is at 1.1658. And we will move our stops to entry at 1.1600. And our take profits, our second take profit, or our take profit, our only take profit really. Let me move that down as a red line. Be down there somewhere. There we go. 2.5, what did I say? 72 pips, which was something 57, if I recall my numbers. 115.57, which is right about there somewhere. Doesn't look right. 2 times that, 2 times 29 is 58, 72 pips below there is 43.57. That's right. Okay. Happy days. No more work to do until that actually triggers. Now, in terms of when do we get out of, or when do we cancel this order? End of day. End of day. Or when you go to bed, if you feel better that way. And certainly if you were not trading with an EA or the trade manager in particular, please don't go to bed with this open. That's not a good plan. All right, so nothing to update. Everything from last week is now closed, and a few of those had a bad week, actually. I lost 1% to the brokers. Donation I don't like making, but that was the way it rolled. My own silly fault, really, because I didn't take profit where I should have. and that is disappointing. So trade management, as always, very, very important, and I failed in that situation last week. Not because I didn't want to, or not because I wanted to fail, but because other things got in the way. Anyway, that's the way it is, and I hope you did better than I did. Let's see what's happening this week. As I say, nothing to update, but let's go take a look around the traps and see what I fancy. Well, as always, I'll just go quickly through the weekly game changer bars. Game changer bars, for those of you who aren't aware, are candles, bars, whatever you want to call them, who tell me there's a potential direction for the market to travel in that, or in the upcoming week. And that is gauged by, in this case, this being a game changer bar, it's telling me that we should be trading this long. And the reason for that is that it's created a new low in relation to the previous candle, and it's closed on or near its high. It's as simple as that. New low based on the previous and closed on or near its high. Going the opposite direction, new high, closed on or near its low. So that's a game changer bar suggesting short. It's a game changer bar suggesting long. Now, not to be traded like everything else, not to be traded in isolation. You need a reason to follow that. And that reason will generally come from the primary trend or primary momentum. Primary, what I mean by primary is look at the monthly chart, monthly or weekly chart. You can go to the intermediate as well, but if you haven't got a clear big boss, I call them, on the monthly chart. Now, the big boss could be a trend. It could be a chart pattern, but it's certainly backed up by the game changer bar. In other words, it goes in the direction that the big boss is telling it to go. What is this? Aussie Kiwi. I sacked Aussie Kiwi. Let me put an Aussie Kiwi chart and I'll show you exactly what I mean by that. Aussie Kiwi should be there. Okay, so the monthly chart needs to tell me something. It needs to tell me what is dominating, and that's why I call it this. Now, when I look at this chart, what is the most dominant feature that I see? Well, there's actually a few, but overall, you would have to concede that the market is actually going down. Currently, in an uptrend, or is it a retracement? Don't know, but it could be either one. And here's what I look at. What really is dominating this chart? Is it the big head and shoulders sitting up there that has been broken, retested, market went into trend, now in range, has been in range for a long, long time? You could argue that the trend is broken, and I wouldn't disagree with that. So is the big boss the double bottom and the higher low? Maybe that's where we need to be looking. So I wouldn't looking to be trading this short really at the moment. I'd be looking to trade it long. Weekly game changer bar is telling me to trade it long. There is an issue, however, and that is we are way, way, way overbought, in my humble opinion. So I'd need to see a far bigger pullback than what we've got at the moment. And I certainly don't want to trade long here straight into these highs with a risk factor down here. It's just a very, very poor probability trade for mine. I'm not saying it can't work, of course it can work, but it's a very, very poor probability trade, and there's going to be better trades available than that. Right, so I won't go through that process for every single one, but I hope you now get the idea of what a game changer bar is and how it is to be treated. So it's not to be treated in isolation, but they are very, very handy if they're going with what I call the big boss. So that's the first of them, Aussie Kiwi, which is kind of remarkable given that I'm just got an amazing short bias on Aussie Kiwi, given the price level that it is at. I'll get that out, that it currently sits. Next one is Aussie dollar. Now, you've got to, again, as everything, take this into context. There is a head and shoulders sitting here. The neckline's been broken. It's been retested, but gee, it's in a whole mess here too. There's another bigger inverted head and shoulders sitting there as well. So the chart pattern here is a little bit two ways as far as I can see. That's the market. Sorry, the big picture. Little double bottom on the smaller time frame, the weekly. Weekly suggesting that we go long, and I'm not against that in any way, shape, or form. I don't know that there's too much in it, to be fair, in terms of reward, but you'd be looking to trade it up to here. There's a nice confluence of trade line and horizontal level, but I want to see a higher low before I do that. I'm just not going to take that candle or the chart pattern on its merits. I need to see a pullback before I trade that. So a higher low, definitely target area here on Aussie dollar, but not yet. And again, these game changer bars are suggesting that that's direction for the week. It's not saying go there now. It's not saying that's what you need to jump into today or this minute. It's saying hang around a little bit and wait until you get the setup that you need. If you've got a setup there already that suits you, fine. But if you haven't, then wait for that setup. These are all the same, guys. I won't go through them all. I'm going to finish up, though, with the dollar pairs, dollar CAD and dollar Swissy. Dollar CAD game changer bar to the downside. Very, very interesting, this one. And you've really got to understand where the dollar is at the moment. And to do that, I'll go to the dollar index. And the dollar index is showing me that we've come back below this absolute key level that we pointed out to you over the last, well, few months probably. Why is it such a key level? Because it hasn't been this high since the turn of the century. And we spoke about this at length, and now it's come back off that level. Not surprisingly, we suggested that it would be retested for sure, and then probably some, as Ash said, I think last Thursday, there's probably more in this, and it looks like that's going to be the case. Sad today, in my opinion, that it's just gone so fast and off a gap. So pretty much impossible to pick up for me anyway, if you're in happy days. But I'd still be looking for a retest from below now of that level if you are thinking about trading it short. If you were to enter now, I think it's a very, very poor reward to risk trading down to the monthly pivot. So I wouldn't be entertaining that thought. But it is a game changer bar to the downside. So take that on board if you wish. And the last of them is, sorry, that's the dollar index. Should have been talking about dollar CAD. Dollar CAD is a game changer bar, barely, but it is to the downside. I find that very, very difficult to trade. And that monthly pivot that you saw on the dollar index is probably indicative of this line here, which is really, really tough. It's a strong level and it's going to be tough to get back through. So I don't think I'd want to be trading that until we got below it and retested it. There is a confluence there as well. So maybe a fair bit of time before you get there. But I do fancy that, just not now for me. And dollar Swissy is the last. Massive game changer bar to the downside on the weekly chart. Once again, I'm not sure there's a whole lot to gain out of this, because you do have a fairly strong horizontal level not too far away. It is a big bar. Your risk has got to go there or there. It makes it a very, very poor reward to risk, in my humble opinion. I do have a few that I'm watching outside of those, of course, and I said dollar CAD. I think that's one of them. I think my favorite is Kiwi Yen. Now, I haven't got that chart up, but let's go there. The reason it is because it's at such a high level. Now, the yen had a shocker last week. It really did. Looked like gaining a little bit of strength there a couple of weeks ago, but then it just went straight back to its old self, which is, of course, sell the yen. There is a breakout here on. There's no question about that. And the question that only remains to be seen, is it going to be a true break or is it going to be a false break? And that's why I like it, because it is in the right area for me to trade it. This line here, crucial. That's the weekly chart, of course. You could even consider entering short below that bar and putting your stop loss maybe above those two highs. Reason? Well, if it's not going long, it's going the other way, right? And if it does go the other way, then it's going to come back and challenge the bottom of that range, which is about here somewhere. So there's a confluence there as well, maybe even a bit lower down here. I'd be waiting on that, maybe pick it up on a daily chart as a false break of that trade line. Big gap down this morning, but they've just jumped straight back into it, obviously. I'd be waiting for that to come back below that trade line, retest it from below, and then I'd look to trade it short, probably down to that confluence area. I think that's probably my favorite for the week. There's very, very little chance, in my humble opinion, of getting this horribly wrong, because it's either going to be a no trade and this market will just continue to rally, or the yen will find some strength from somewhere, God knows where, and we'll come back under there and retest it, and then we'll go back to these levels, as I say. So I think this is a very, very difficult one to get wrong. And if we do get below there, I'd be very, very keen to trade it. I think the yen pairs in general are very, very similar. There has been a big breakout on, what was it, Tuesday or Wednesday of last week, as indicated by this chart. And I think if that can turn around at all, it's going to be very, very similar on every single pair against the yen. Maybe the dollar would be the exception to that, as it always is. Very, very difficult to follow. I think that's around about where I'm at. So let's bring Ash in. G'day, buddy.
Hello, mate. How are you doing this morning?
Yeah, look, I'm okay. Had a nice weekend, nice sleep. So yeah, bouncing back okay. How about you?
Yeah, very well, mate. Yeah, well, the American football season started, so what could be better than that? Yeah,
no sleep for you.
Well, I've managed to kind of sign up to NFL Game Pass, so I'm trying to watch the highlights the next day rather than stay up all night instead.
I think that's a good idea. NFL Mini.
Yeah, it's like 40-minute highlights, so it is a bit better.
Perfect. Yeah, instead of 8 hours or something, those games go forever, don't they?
Well, do you know what they start? I mean, it's crazy, really. In the States, it's like 8 hours of football, 3 games back to back,
Wow.
And I don't know how families stay together. I really don't. If anybody's sat in front of that all day, but it's quite good. For, I like things on in the background while I work, because with a lot of the stuff I'm doing, it's data entry, effectively. Looking at the data and putting it into spreadsheets, and you don't need any huge focus for that. You just got to plug it in. So I like things under the background. So the NFL season's great for me, because it's just games upon games upon games, and I can just kind of get down to some data entry. Hey Lewis, how you doing, buddy? But yeah, I mean, let's talk markets, mate, because a big move last week, really, in the global equities. And I'll show you where we're at with
just before you do, mate. I'll just answer Anne very briefly. And firstly, congratulations on getting into pound Swissy short. That's a fantastic position to be in. You say it's going up. Do I still think you're in the right direction? Look, you're asking a big question there. The answer is yes, I do. But the other answer is maybe it's got a little bit of a breather coming up, because it's hitting this level here, and that level there is reasonably strong. So my double-barreled answer is maybe it's time to take some profit, or tighten up your stops, or both, if you like. So, I think, yes, it can go through there. I don't have a problem with that. But it is at a strong support level pretty much at the moment. So if I were in it, I'd be certainly tightening my stops up and maybe putting them around about here somewhere. I'm not sure where you got in or anything like that. So I don't have context around that, but that would be my appraisal at this point.
Yeah, I mean, I'd let's talk about that first, because it is a good question, and it's a good place to start. Let's talk about a particular chart. FTSE 100 we'll come back to, because there's no screaming trade here. There's probably going to be some profit taken up here, but a dangerous trade to take. So pound
and
Swiss.
Also, George, you okay for time, buddy?
Yes, I got plenty of time, mates. So go ahead.
Awesome. Good man.
Brilliant. Okay, mate. I'll be done in 10 minutes. No more. The pound Swiss. So firstly, the pound is weak. It's a really weak currency. We had GDP numbers this morning, month over month, 0.2% growth, which is okay. But the pound is a really weak currency. The issue that you've got is that you are in a currency that against it is also relatively weak. We've seen the Swiss National Bank raise interest rates to I think they're at negative 0.25% right now. I'd have to double check that. And there is an anticipation that the Bank of England will have to go again. How deep they go or how aggressive they go will determine the direction of the pound. But I suspect we could see a pause. So let's just have a quick look at that. And I think Jeff's right. Rather than closing the full position, it's probably worth maybe taking some profit. You know, that's what I'd be doing. I'll be looking to take profit. I'll be looking to tighten those stops up instead, because as Jeff says, very strong level down here. It's only been down here once in the last 10 years that I've got on this particular chart, but it might even be more than that. So there is a likelihood that there will be some money kind of coming back in here. Very speculative money, because as I say, the pound is really weak. But there does, you know, it would potentially have more of a propensity to bounce rather than go through that level on first time of asking. Now, if we bring in kind of what's going on and what could shape the movement with the pound, I need to find Zoom again. Where have you gone? Maybe it's here. Oh, where are you? Here it is. Let's have a look at what we've got coming up. So GDP from the United Kingdom this morning was at 0.2%. So better than the negative from last month. Output is weak. Trade balance is getting better, but that would happen with a weaker currency. It should happen with a weaker currency. Production numbers don't look very good. So the UK economy isn't doing particularly well, and you've got a prime minister in play now that is likely to put further pressure on weakness for the pound, because they're going to want to spend. So she's talking about lots and lots of borrowing. So that keeps things quite low with the pound. CPI numbers that we're not really interested in. What we are interested in is when is the next rate decision, and it might take us a little while to find it. I can't remember exactly when it is, but we got a load coming this month. Here we go. So it's on the 22nd of the month, so 10 days away. You've got a rate decision. Now that's going to be the key. So would the pound Swissy go through that important level before that date? Probably not. You know, the chances are it probably wouldn't. So you're kind of looking to say, well, what would market participants do when there is something coming up which could actually strengthen the currency depending on how much they hike interest rates by? Well, I would suspect that some of those market participants that are in the sell side would possibly start just to ease back their positions. Some will keep it open because they do see the structure of the pound as very weak, but a lot of the others will just start to take profit. So I think you've got a couple of choices really. You know, with a very weak currency, you could flip what you've got to another currency which is potentially going to strengthen against the pound, or you can start to tighten those stops, or you can just take some profit and, you know, do things that way, manage the trade. But I definitely think it's time, or I certainly would be moving into some management phase of that particular trade right now, just to make sure it doesn't come back. Because, you know, as Jeff says, it's been a great move if you've been in that trade. And if you were in a wave rider on that, then I looked earlier on, and it was a over 3% trade on the wave rider on just one of the entries, and I think there's been 3. So I think there's potentially a 5% gain on that one. I think one of them was a loser, but 2 of them were 3+%. So I think you're 5-6% up if you've traded a pound Swissy. Yeah, it's been a really good one. But look at the move. I mean, this is a monthly position here. Down, down. Likely to hold. I don't know if it's likely to turn, but likely to hold here for a little while. The currency that all of a sudden starts to become interesting this week is the euro. And it's because the euro is literally flipped from the weakest currency to the strongest currency. If you look at the fundamentals, and the COT data. And that's because of the raising of interest rates. And this is the challenge that you'll have, Anne. If you leave things open when there are interest rate decisions looming, you could actually see the currency turn around and flip, depending on what's said by the central bank of that particular region. What we saw last week was the ECB come out, raise interest rates by 75 basis points, and then there's another anticipation that that's going to happen again in December, putting the euro much stronger on the radar. So we're probably looking for euro longs, and I have to say the one that I was looking at for a euro long, the main one, was actually against the Swissy. So the Swissy's not coming out particularly strong. Look what we got last month. Euro Swissy.
Only got your.
Oh, sorry, buddy.
Yep.
Yeah.
Forex Factory.
Go back to this. Here we go. Look what we got last. Oh, we said, just finally on the pound Swiss. This down. So we've had 5 months of just bearish price action with no relief. Now, when you hit a level of potential support, and you've seen 5 months of no relief of price action, and you've got a central bank coming out, you've got to suspect there could be at least a hold here. Now onto the euro. So Euro Swissy, where are you? There you are. Euro Swissy. This is last month's bar. The interesting thing about last month's bar is that we get a hammer. Call it what you want, but the textbook term for this type of bar is a hammer, and the reason it's called a hammer is because it is the potential of this is that it's hammering out the lows. So if it hammers out the lows, it's got to be the lowest bar in accordance to price on the chart that you can see, and you can see that the low of this is lower than the low of this. But the interesting thing is, if you take where it ended up closing, it ends up closing way beyond this level here. So that is a really strong bar from last month. Now you've got the ECB on the move. Now, if we go down to sort of some of the shorter term timeframes and see where the entry is, what we're seeing here, which we'll see a lot clearer on the daily, is, and this is what hammers create. On shorter term timeframes, hammers create inverted head and shoulders. So we got an inverted head and shoulders starting to form on the daily. We've got the hammer that we've seen here. Where's the neckline of the inverted head and shoulders? It's probably, it's going to be a difficult one. It's probably there. And the reason it's probably here is that if we check this against, let me rub this one out and do it on MT4. If we check this level, the angle of this level here, it looks like it's running through these areas here, and this, a couple of false breaks either side. But this looks like the inverted head and shoulders. So you'd be picking up somewhere near this this right shoulder. Is it long enough yet? Well, this is the start of it. That's the middle. There's 18. Tomorrow looks like it would be the and this could be up there by tomorrow, because we're talking about the whole right hand side of that shoulder. So the Euro Swiss is looking good. Look at the bar this morning. Really strong bar. It's got to get through these levels here, and that would also coincide with it getting through the monthly pivot. But if that gets through the monthly pivot, you can start to see market participants coming back into play here. Looks like there's some trend lines, up here as well, which we might see it come back and create an entry there to see if it would take off. But if you're looking at the measured move of this inverted head and shoulders, the conservative measured move, which I do, is going to lead us back up to these areas here. So the Euro Swiss looks like a really positive looking chart to me. The other one is the euro CAD, and interestingly, the dollar also comes out relatively positive, but the reason the dollar comes out positive is purely because of seasonality. Fundamentals and COT don't really say go long on the dollar, but the seasonals do. Now, the seasonals are the weakest of all three of those indicators because they are historic, and the environment needs to be right for those historical averages to continue to play out. So I don't really like the dollar. If I was going to sort of like look for any currency this week, it would be the euro. It'd be looking at the euro and looking against the weaker ones. CAD and Swissy. CAD might be a bit difficult depending on what happens with oil, but Swissy looks like a pretty clean and pretty straight line trade to the upside. So euro Swissy is the call this week, mate. And
yeah, I said euro Kiwi, so
okay, cool.
Either one of those would probably be okay.
Yeah, I think you're right. I mean, the Kiwis are around about midway when it comes down to fundamentals and COT, but still it's not in the upper regions. You know, we've got a couple in the upper regions, and it's the euro and the dollar. But the dollar's only there because of seasonality, which is not particularly positive. Euro's there for much better reasons. Fundamentals, it's up there, and the COT data, it's up there. So euro looks like the strongest on paper anyway this week, and then it's just trying to find the correct entry into this particular position. I don't know what the euro CAD looks like.
It's a while since we've said that.
Yeah, absolutely is. And look at the euro CAD. I mean, look at the euro generally. Nice gaps up. I mean, this is a positive start to the week for the euro. If we go back to what might be the turning for the dollar, then we are looking at the dollar or the United States providing us with data which would suggest that this is going to be positive tomorrow. This number here. So we're looking at the CPI data. Now it's predicted to come down again. CPI month over month is predicted to come down again. If that surprises to the upside, that's going to put pressure on the markets. It's probably going to make the dollar rally. And given the seasonal aspect, it means that we should probably be avoiding the dollar if we want it for a short. That's the way that I read the dollar. Fundamentals and COT don't say go long, but the seasonals do. So because of that, I'd be saying, look, let's not trade the dollar short. I think it's a bit dangerous. If that CPI data comes out weak, that might just start to flip the sentiment and the bias, and then we could maybe take on the dollar shorts. But before that happens, I wouldn't want to fight the seasonals, considering the others don't really give us a strong view one way or the other. Euro, different story entirely. So you know, I'd be edging towards that. I'll briefly cover the equities, because equities had a huge move to the upside towards the end of last week on Friday.
Tell me about it.
I mean, it's still going. You know, we're still seeing the FTSE 100 push to the upside, and we're seeing the NASDAQ also have a decent push to the upside, right on top of that monthly pivot. You'd expect this to be pausing at some point. You know, maybe a bit of profit taking in play here, but look at that bar from Friday. Huge breakout bar, and there should be some retracement into the body of this bar. But when that comes, I don't know, and it might again be about that CPI data on Tuesday. What two scenarios that I can see playing out? One is that some profit taking happens before that number, just in case, and then maybe buying it back up if the CPI comes out weak. The second one is that we just hold these positions. CPI comes out strong and it tanks. So I think that there is maybe a bias to wait, you know, maybe because if you start shorting this market, you're going to be fighting Friday, and Friday's a strong bar. If you wait until Tuesday, then if you get that retracement and it comes out weak, you can then join in the rally. If you wait until Tuesday and the number comes out strong, then you can start fading this rally and possibly even looking for further downside. But you know, another surprising hold, I think, from equities, considering the environment of central banks across the globe.
Didn't do me any good, I can tell you. That was not what I was looking for.
Yeah, market always manages to kind of surprise, doesn't it?
Well, I'm just learned about these indices, right? I haven't traded them before, but
well, do you know, mate? You know, they surprise me a little bit as well, and sometimes you just don't really understand why they're doing what they're doing. There is this magnetic pull for indices to go up, and you've always got that, you know, sort of that you're fighting at the back if you ever go short. But the environment isn't really good for indices.
I wouldn't have thought
However, they've come down quite a way. So fair value might start to come into play. Now, of course, with the United Kingdom, different story entirely. Pound weak. You've got the dividend yields around about 4% for the index in total. So people that are you know, have got shares abroad, they could start to sell up and start coming to the FTSE. So the FTSE is actually in pretty good shape in many respects, and I think overall it will outstrip some of these other equity markets over the next 6 months.
Well, the wonderful thing, of course, it's Monday and we have an indice specialist in the room.
Just bring him in.
G'day, George.
Good day, gents.
Hi, buddy. Sorry, I said 10 minutes and it was 16. Sorry about that.
Are you still lounging in your hideaway, mate?
Yes, I am, mate. Yeah, next week we'll be back. We go back on Sunday. So it's really a beautiful place, as you can imagine. And the weather has been fair, that we're out of winter. So good times, you know, just hanging around the beach.
Awesome. Enjoy it, mate. Enjoy it.
We'll definitely do. Yeah,
what can you tell us?
Is, on the Queen, I think you all affected one way or that, directly or Commonwealth, right?
Yeah.
Oh yeah. Did you know what? I'm not I'm neither a royalist or a Republican as it goes, but I think that the royal family give a lot of people in this country a lot of pleasure, and I support them just really for that more than anything else. As I say, you don't really ever know what goes on behind the scenes with world leaders, and you know, when we kind of laud people and put them on this pedestal, I think most of it's quite unfounded, and you kind of you can end up kind of looking at things with road tinted glasses and just looking at the good stuff rather than all the terrible things that you know, certainly the Institute have really kind of done. So I'm neither here nor there on it, but it's one of those things. I think sad day. It's not tragic by any stretch, because she was 96, so it's not something that has been a huge surprise. But kind of, you know, you just don't want to see any family go through any loss really, and they, you know, they are devastated. The royal family are absolutely devastated. So now
you've got to say, you know, and I don't want to go. I'm very much on the same page as you, Ash, because I can't forget, you know, the past, frankly. But whatever that may mean, you would have to concede that she's been a very, very strong representative of your country, or your, you know, and the Commonwealth. And what a grand performance over 70 years. My goodness me. So yes, I mean, she does deserve credit for everything she's done. And you know, I don't know that she's sent too many people to war and to rape and pillage and all the rest of it. So I don't think she's got a problem, really. She'll go to heaven.
I agree with that, mate. I mean, it's more the I suppose the history that the royal family themselves kind of you know, have got on their backs, and you know, she was thrown into a position where she was very, very young, a very, very young woman, and one thing that kind of like does get maybe forgotten about with this is that she is probably responsible for women becoming become further equal part of society. And if you look at some of the footage that you know, during the war, she was getting her hands dirty. She was down in there. She was serving. She was fixing Land Rovers, and you know, she was sort of under bonnets and doing all this sort of thing. And all of a sudden, it meant that women sort of like came into the workforce, and they were respected in the workforce because they could see that a queen would do it, a princess would do it, go in there and do this stuff. So, proving that they are just as able as men in roles that were perceived as male-dominated roles that only men could do. So, I think for that reason alone, that she should have huge respect.
Actually, I agree. Respect is the right word. What a flip-flop for the UK. You've gone from a male prime minister to a female prime minister, and from a queen to a king.
Queen to a king.
Yeah.
My goodness.
Well, the female prime minister probably won't last long. I would give her 2 years, and I think she'd be out. But yeah, absolutely right. The interesting thing is that Putin was the first global leader to pass his condolences, and I don't know whether that's another play, but interesting that if you read it on face value, that somebody who is kind of currently committing some pretty atrocious things respected the head of state of the United Kingdom. Even he respected the head of state of the United Kingdom. So that on face value looks like an interesting kind of turn of events as well.
Well, just on that, we caught glimpses of this 6-hour motorcade from one place to Edinburgh, from Balmoral to Edinburgh. One thing that's struck out for me, and I have to ask this: why would a German car be carrying the Queen?
Because the royal family were half German.
Oh, is that? I said to my wife, there must be a reason, because this cannot be a mistake. Okay.
Yes, Prince Philip, her husband, Prince Philip was of German lineage. So
that makes sense.
So and she had members of her family murdered by the Nazis, and it was a big furore at the time because she was effectively marrying somebody from the other side. She fell in love with somebody on the other side, and there was a big furore about it because that's just something that wasn't done. But yeah, that's the connection. The connection is that actually the royal family are half German, or they certainly have kind of German in their bloodline because of Prince Philip.
They would certainly have been interesting dinner conversations between 1930, 39 and 45.
I can imagine.
Wouldn't you have thought? Yeah, incredible.
Yeah,
George, we've held you up a fair bit, man.
Say that again.
I said we have held you up a fair bit. I know you're bursting to tell us that this is just a fake rally, right?
Yeah, I know this is all just rubbish. I mean, this is going to sell off. I mean, there's no ways you can ignore Friday's.
No, you can't now. No,
you can't. I mean, the whole thing was this big bear sell-off coming off the EMAs here in terms of price action. I was kind of thinking a higher probability of the market going sideways and then a little bit more selling, to get down to these levels. But that really, for use your terminology, changes. What do you call it? Game changer. That changes.
Game changer. Yeah.
And purely for the reasons that if you look at the strength of it, but we're breaking out of this trading range, and we closed above these EMAs, which in a trend, they're very strong indicators of strength. I mean, strong bear trend, 10 EMA, 20 EMA. Now, what I'm expecting, of course, is follow through by the bulls. And the bulls, if they really are going to change the game completely now, from my perspective, they're going to have to give us another follow through candle, because that breakout candle, for me, is not the confirmed breakout. The confirmed breakout comes with the follow through candle. So if today ends up, doesn't matter how high it ends up, if it gets up here or gets to the measured move of this trading range, which is up here, then the bulls are showing us strength. Then we look for a pullback. Now I'm talking about on a higher time frame, because that's kind of the governing time frame. Look for a pullback and see how much more we get. Now, I've just mentioned the measured move. if I was trading the daily chart alone, I would not do anything until we get up here, because I'm expecting that bulls are strong. They have to get to the measured move off this trading range. So I'd rather wait on the day and see what happens after that. Now, trading off the 5-minute with that background, I mean, just look at the first candle. Huge gap up, but bulls, we expect them to be strong. Why would they allow a sell-off for 2 candles? Okay, so that kind of raises some alarm bells for me. But yes, the bulls were able to push up, give us a bull candle on Friday, but they've not been able to follow through, all the way up to now. I mean, we're already way into the open of the UK markets. So on this time frame, yes, I'm keeping the bulls in mind, but I've got to wait and see now. There is the open. Okay, Siri wants to say something. Let me just close there. There is the open of the day. Even that breakout above the open of the day is weak. We've got a bear candle there. So that for me is not showing any strength by the bulls. I'm going to have to wait to see what happens if we get back to test the high of yesterday, which is the green candle. And this was also the bear breakout level that we had on the 26th August. What do the bears want is, of course, we can see Friday is strong, but the bears just want to get back beneath the high of Friday. If they show us strength and come back and test that, then I'm going to start to sell and see how far we go down into that candle. So the key levels for me to watch today is, let me just show you this breakout level. So this blue line is this breakout point here. So we had the bears coming strong on the 26th. The actual breakout of the bears was here. So the bears are really keen to get beneath this level. So that's what I got to wait for. See if the market comes down here. If the bulls are able to give us higher lows from the open, from the low of the day, bounce off here, then happy to go long. But if not, if we get back below this, strong bear candles follow through and pull back to test, then I'm just going to sell, because that strength will be waning, if I can put it that way. So I'm going to wait a little bit just to see how much, what happens. So that's.
What do you think, George, when you see that breakout, that Friday's breakout bar?
Yes.
Do you expect price to come back into that bar?
Yeah. So for me, that bar alone just shows me, yes, we had bull strength on the day, but they're not strong until they give me a close above this on the day. Yeah. And until we get that, I'm expecting failure of sorts to come back, test the 20 EMA or the 10 EMA. And if off these EMAs, they give us a low test, I think he called it a hammer, but low test. So let's say, look at this candle here. As it is now, if we had a pullback to the EMAs and the candle ended up like that off the EMAs, then definitely you're going to have to just buy.
Yeah.
That's what I'm looking for. So that's what's taking place at the back of my mind when I'm on the 5-minute, that today's candle is either going to demonstrate that the bulls are strong, or we're going to start to see the pullback, in which case in the day I can sell off that pullback and see where we end up as the day ends, and then sets up for tomorrow and see how the candle has closed for the day, whether I wake up looking for more longs or selling off. So today is a decisive candle for me in terms of where the market is likely to go.
Yeah, it's an interesting one, isn't it? I see a little 2-point trend line from the highs there, which we're right on top of now. And the market has opened fresh. We're seeing oil actually sort of start to rally again. So BP and Shell obviously sort of as big aspects of the FTSE 100 certainly enable it to rally at this particular point as well. But
Yeah,
that seems my
you
days
Poms
tomorrow.
have come out firing this morning. There's no doubt about that.
Yeah, they have, mate. Well, I think European markets have come out pretty hot, which again I do find a little bit of a surprise. FTSE less so because of the components that make it up. But you know, when we're sort of thinking of the when we're kind of like thinking of the action of the central banks, you know, I do find it a little bit surprising that we are seeing global equities move in the way, or, you know, I'm surprised they did move in the way they did. And it was right off the back of the ECB's announcement. And then Jerome Powell came out and spoke. And I listened to his speech. It was, you know, as hawkish as before. There wasn't really any kind of indication that they were flipping positions, but market certainly, you know, whether it's robots picking up wording or whatever else, but the market seemed to like what he said, and there we went.
You see, if you ever look, I've just put up the German 30 here. If you ever look at Friday's candle, and you just go back to July, and you look at the 19th July candle, that candle broke out above this trading range. Ultimately, we had a bull breakout spike in the channel, which probably got us to, you know, if we just look at that, if we just looked at that candle alone, we ended up getting to the measured move of this candle and then selling off. But have a look at what happened after that. I mean, if you saw that and say, hang on, I'm going to jump in to take this trade on the daily, and you just bought there, you need to make sure that your stop is the more aggressive stop is down here, just at the bottom of the breakout. So from a price action perspective, if you want to be a little bit less aggressive, just to go down here. So if you're buying this, we just got up and say, hey, look at the breakout, let me buy. Aggressive stop just below here or at this level. And then you got to expect that this kind of price action that we got on the very next day, dodgy candle. So bulls here broke out, but the bears haven't given up as yet. So you got to hold through your trade, wait till you get to the EMAs and get this kind of candles here.
Right.
You know, and just try to jump in and hopefully get to a measured move. But then you just have to have the strength to just ignore everything else until you get to a measured move. So we might get that kind of thing. Yeah, bull strength above and breaking above a trading range. And the goal might be to get to a measured move. Now, this is on German 30. The measured move then is not too far. So if they get to there, from a price action, I'm not surprised because I'm saying, hang on, bears sold off, pulled back, and carried on selling. So this is a key level for the bears. So even if they allow the market to get here, the measured move, then I can still expect more selling taking place there. And it's the same kind of thinking that, you know, just at a macro level, if you ever look at it, there is a measured move, UK 100 to get there. If you just look at the measured move of Friday's candle, it's not taking us way above that or way above, you know, all of this trading range price action channel and the bear breakout. So yes, you can still profit if you can hold through and make some good monies, not much on a daily because you're not going to get to one barely if you get to there. But that for me, you know, while I celebrate the strength of the bulls, and if I see longs on the daily and those pullbacks, I will certainly do that. But I'm still thinking that the bears have still an opportunity, high probability of controlling the market because of where we're heading towards. So there needs to be some strong kickers to give the bulls strength to break out above that.
Yeah.
So
yeah,
when I drill it down, we've looked at UK. Let's just look at German 30 on the day.
I'm going to say, is there one different to the others? I mean, this appears to be across the board to me, everything.
Yeah, it's unfortunate that my favorite pair is closed today. I love Hang Seng 50 because when it's the first morning session, no one else I'm looking at. But that as well, I mean, on Friday, gave us a huge bull candle. But if you look at it, the market failed to close above the 10 EMA, which is a real strong indicator that yes, we had bulls, but they could not, unlike in the other markets where they closed above, both EMAs. Here they failed. So when they open tomorrow, I'm going to be looking, quite actively for shorts on this market. So if you had been open today, definitely I would have been, not even worrying about a bit of bull strength first, maybe selling off, simply because the bulls failed to get that close. I mean, if you look at UK 100, there you go. Above both EMAs, German 30, same thing. S&P 500. I mean, previous they had and the follow through they had. So the one that's really different is Hang Seng 50.
Interesting.
It depends what happens when they're open tomorrow. So on indexes, that's what I have. My usual end of month analysis. I had 4 other indexes here. I had taken no trade at all in 3 months. Euro Stock 50, Aussie 200, Nikkei 225. So I just popped up 3 currencies and gold. Still very fresh and reanalyzing them. My financial year ends in 3 months, end of November. Sorry, my financial year ends of September. My trading ends of November. So I want to see if I can pick up some trades in these other charts as we go towards the end of the year.
Any thoughts on gold, George?
Let's have a look at gold. Yeah. So we're still in a trading range, right where we are. Now, gold is also interesting. If you just look at the tails on top. Okay, the markets, this is today's candle, so we'll see how that ends. But after the sell-off that we had, I mean, the 10 EMA coming down is due to the bear strength. Although we've been going sideways, we haven't had a day that is closed above the 10 EMA. And those tails are telling me that the bears still want to sell off and to get down here. Getting down here is where the bulls would like to create a double bottom. So if we get down here, I don't think the probabilities favor the bears to break beneath here. That's 1.6 level, low 2021. There's all sorts of measured moves. There's present low of September. So I think the market will come down here. But when you get down here, then you got to be looking to buy. That candle that we got here, this was 21st of July. It was really the setup for the bulls, I think, to create a double bottom and then accelerate up. Low probability event, if the bears break out beneath here and do a follow through, then wow, that really
look out. That is a massive level right there.
That's if we break beneath that, I mean, gold is going to go down to that 1.53 level. But that's going to take 1.545. That's really going to need, I mean, look, every time we got down to this level, strong bear candles, yes, we went down, but trading range behavior, overlapping candles, then a huge reversal. Bears had the opportunity, they failed. So I'm thinking double bottom here and accelerate up.
Yes, you can't imagine what it's going to take from a fundamental point of view to drive gold through that level. You just can't imagine it. But technically,
I guess further dollar strength. If we see further dollar strength and those bond yields continue to push higher, that'll be the thing. But I guess that's if you look around the crypto market as an example, because we need stuff that will give us information against the dollar. Cryptos are starting to rally again. Bitcoin's up 10% in a couple of days, up 20% in a week or so, and the crypto market is finding some strength now. Of course, Bitcoin is priced against the dollar. So are people buying it up because they like Bitcoin, or are they buying it up because they see some potential weakness stepping in with the US dollar? And this is where we start to push towards gold. You look at the silver chart, different picture. I mean, that thing's taken off. So there is just a little bit of nervousness, I think, about the current moves in the dollar. and it has got very, very high, very, very quickly. So a reversal of some type is going to come. And it really does depend on what policy is going to be and how other countries will treat the way they use the dollar to suggest whether we get an absolute explosive move in the likes of gold and cryptocurrencies, or whether things remain relatively gentle. I think that there's probably a lot of people that are concerned about the dollar. I mean, with real concern, that are probably loading into this stuff. But the charts at this stage don't say it. The COT data doesn't suggest it either. The COT data is still suggesting that there is enough selling pressure with gold that the timing is just not now.
Well, it appears if you look at the bar, 4 bars back, which is that massive bull bar, that one.
Yeah,
you would think off what really is, I call it a double bottom anyway. It's already come off a double bottom in my opinion. That's a higher low, and it's full of energy, yet it could not be sustained at this point. And you've got to ask the question, why? Why is that?
Yeah, that's a good question. I mean, why can't they sustain it? And I mean, even if you look at so with the bear candle and you look at this candle here, if you didn't have color coding, that's a good sell setup for the bears.
Yeah.
Because it's a bull candle. Even if the sell triggers, it's a bad sell signal because it's a bull candle, so you can expect it to fail. So everything is still kind of layering up all of these things to make the double bottom stronger at this stage.
Yep.
So, and then something is just going to trigger it,
Can you anticipate any trades today, George? The market looks a bit tricky to me today. It looks like we're probably going to get some follow through, but it might be on light volume.
Yeah, I mean, if you go back, I mean, if you ever look at that, when I kind of see that, if I've got some admin work to do, like you get your NFL on the background. So usually I'm completely silent. It's me and my thoughts. But when I see things like that, then I can work on my charts, do something else, get up, walk around, because I know it's just going to take time to set up something for me to trade. So it's unlike other markets where you kind of say, hey, man, I could have missed that cup of coffee. Now this thing is gone. Do I get in? Do I wait? But with this, I think there's a lot of waiting today. So I'm not sure whether, and that's the thing with price action. I'm not sure whether, or rather, let me say, I don't walk away and say the day is gone. Let me come back tomorrow, because it might still set up nicely as we go into the US session and give me something to trade, which, in the first couple of hours that I'm trading that open, you might get good opportunities, get good return. So you kind of flip in and out. But whether if we end up with some kind of a doji on today's candle, then that definitely affects my view tomorrow. I'm going to have to wait for that afternoon news forming. Because then I'm kind of saying to myself, I think the market is anticipating something. Best to wait. So I actually, I mean, let me ask you, Ash, whether my thinking makes sense. What I kind of tend to do, if I use GMT time, so 12 noon GMT, which would be 2 p.m. my time, and I think presently it's 1 p.m. Your time. That GMT 12 noon for an hour until the US markets open, the market tends to range. Is that something you've noticed, or is that just
if there's no news? I mean, it does, that particular hour before the US Open does tend to be sort of quite news heavy if there's an event on that day. I mean, I think the CPI data will probably be out at 1:30 UK time, but I'll have to double check that. But it does sort of, the US does seem to like to announce stuff an hour before market open. 1:30 the CPI data tomorrow. So it's not it can create quite a lot of volatility, but certainly on a quiet period before the US opens up, then yes, if there's nothing kind of in, then it will be sort of like a bit quieter. I'll tell you the particular time as well, that there's between 11 and 12 UK time tends to kind of tell us something. So there are three real times in the UK. There's the open, 11 to 12, and then it starts to die down again, going into a bit of a range. If there's no news at 1:30, then it's the US Open, and then obviously the UK close. So so they're the times I tend to look out for. If I've missed the morning trade, I'll look again at 11, let's say, and then again at the US Open, and then finally the close of the UK market.
Okay, yeah, that's interesting, because I kind of noticed these things. Like now, the reason I brought it up in my mind, I'm thinking back to, okay, when is 12 p.m. 12 noon? Because when I'm getting to that, then I literally then don't even, I could just switch off the laptop.
I'd agree with that. I'd agree
They're going
with
to
that.
lunch, mate. They're going to lunch.
Yeah, for sure.
Yeah. So
that's pretty much that simple.
Yeah. So it is lunch, yeah.
Yeah.
So
It's lunchtime.
All the pubs in London are full at that.
Yeah, well, they are. I mean, it's a different environment now, though, isn't it? Because of the robots that do all the trading. I mean, there's only sort of the odd person spotted around the trading floor these days, just as a safety, just as a fail-safe, just a breaker. So things have changed. But when I think of the data, when the data is released, lunchtime is avoided over here for data, pretty much. You don't really tend to see a lot of it. So there's a lack of volatility for that main reason.
Okay.
The midday swill.
So yeah, that's where I am, gents. We'll see how the day ends.
I like it, mate.
We're on hold, aren't we, at the moment?
Yeah.
I call it NLNS. No long, no short.
Yeah, Swee's saying the same. Swee's saying absolutely agrees that we just need to be patient for the higher probability setup, and that's the key, isn't it? We just got to be patient. There's nothing here, so we'll move on and look for something else.
Yeah.
Look, if you got in this morning at the open and you're in the right direction, you've had a great day. Go to the pub yourself.
Yeah.
Simple as that. All right, so we better get out of here, I suppose. George, thanks for hanging around, mate. We took up a lot of your time today.
No problem at all. Excellent. All right, gents. Thank you
You're
very
off to
much.
play baseball by the look of you.
Yeah, it's beautiful sunny. I'm just gonna get out just now and enjoy it. I don't want to miss it when I'm back in Joburg, so I'm definitely gonna enjoy it.
Yeah.
Have a lovely time, mate. Have a good week.
Excellent. All right, we'll still see the guys on Wednesday.
On Wednesday?
The of the month, yeah. All right, guys. Take care then.
Great
Cheers.
stuff.
Cheers,
Thank
mate.
you so much, George.
All
See you
right,
soon,
no
buddy.
problem. All right, take care. Bye-bye.
Mate, I've got very little else to do except show you one more thing.
Sure thing.
And that is, we spoke about euro dollar, right? And we always speak about euro dollar because it's the most traded currency pair. I think it still is. And here's where it is today, right? Now, I say to you guys all the time, once euro dollar gets to DS1, or in this case, DS2, or DR2, sorry, watch out for a trade back to the daily pivot. Now, there is a caveat on that. Once the market has reversed, and I'll leave it up to you to determine whether that has reversed or it hasn't, it is quite likely that the daily pivot is ignored, not only for 1 day, but for 2 days. Now, was it tested Friday? No, it wasn't. Hasn't been yet today, right? But we are at DR2. So, like George and Ash were talking about before, do you now walk away from the charts because everything's gone, basically, and there's no trade to be had unless you got in early? Well, I'm kind of like my dog. I lay on my side. I've got one eye closed, but I've got the other eye open. That's what my dog does, right? You can't get away with anything with my dog. So I'll be doing exactly that. I'll be wandering downstairs and I won't look at the charts until every half hour or so, but only after I've got a reason, and I don't have a reason yet. The reason I would need to see would be a bearish engulfing bar, double top, head and shoulders, something like that on a 30-minute time frame. If I got any of those things, then I would certainly be paying full attention, because the probability is still there that this will be tested at some time today. Like I said, it's not a fait accompli, because the market may well have reversed. I'm not sure it has, to be honest, but I really want to know what the driver was for this rally on everything. Can we put that down to one single thing, Ash, do you think?
You know what? It definitely picked
overbought.
up. The market really picked up after the ECB had announced the rate decision, and then Jerome Powell was out.
So, in other words, that's a potential gut reaction.
It could be. I mean, the fact that it's held is interesting, isn't it? But yeah, I mean, it's still rhetoric. Yeah, he's still sort of like, you know, looking at rhetoric, and you know, they're very clever, the central bankers, the way they just leave a little bit of detail out of certain wording that that enables the market to rally. But the danger with this stuff is that it's being propped up, and the question of why it's being propped up is the problem. Because, you know, if all of a sudden get into on the long side, if you're an investor, a retail investor, only to find out that actually, you know, you'd been sold a dud, and the reason that it would rally was to get people in, just so there was a better price to sell it off at, you'll feel pretty gutted about it. So yeah, it's a tricky one, mate. I mean, as I say, I heard the speech, and I didn't hear a whole bunch of dovishness or anything particularly bullish for the market, but the market reacted, and as I say, it so far it's held. It hasn't come back. We got CPI data tomorrow. There doesn't seem to be at this stage that much concern about it. I think, if anything, because we have seen some of the inflation numbers coming off in the United States, there's maybe some idea that we're going to get another weaker number. And if we get a weaker number, then the market will be rallying probably again. Quite happy to suggest that the central bank is about to pause. But I guess it's come down a long way. And because it did come down a long way, just like when it goes up a long way without any kind of retracement, there's usually a bit of a flush out. This could well just be a flush out. This may well be, yes, as you say, a knee-jerk reaction, stops a hit, and then there's just a whole bunch of trades kind of being closed up, and we see a rally kind of going on. I didn't check the volume, which is interesting. I didn't check the volume of the rally, which I will do.
Which is interesting, but it kind of goes to my point, and my point is there's no fait accompli anywhere here. There's no, okay, we've got a 70+% chance of the daily pivot being tested. That's still there. It doesn't go away, right? And if this is a knee-jerk reaction, then we may well see that. But, you know, how are you going to get in? Where's your risk right now? You've got to have that, I know where my risk is, and you've got to have something that gives you an indicator, if you like, that price is going back there. At this stage, all you can see is momentum to the upside and nothing else, really nothing else. This candle hasn't even made a dent on that one, and certainly not on the pair. So I've got to see a double top, anything that suggests to me that this can reverse. Then I've probably got to see a lower high or a false break of resistance. Until one of those things happen, there's no way I can trade this short. As Sui says, and absolutely well pointed out too, Sui, thank you. I hadn't even noticed that. There is as yet a gap in the market. And as we know, gaps are generally closed. This has got a long way to travel. So if you did see a double top and a lower high sitting here, and you can get into this, maybe take some profit there, there's your target. Gap closed. Tick. So that would be perfect. If it does set up, it's got to set up. And I will probably be asleep when it does, if it does. And if that's the case, to the market. But, you know, what can you do? Pound US dollar is the same. Leave that in the market until end of day. Anything can happen here yet. If that was a gut reaction or a knee-jerk reaction to the speeches that we've heard, then there's every chance that this market can come back to where it was. Is it going to? No idea. What can you tell me, Ash?
Well, I think it probably will. You know, I don't like these sweeping moves really. I can tell you that the volume was quite light on Friday. It wasn't
Right.
particularly heavy. So you know that does suggest that there could, you know, it wasn't a rally on much foundation, and it also suggests that there are a lot of market participants that are still out. That doesn't necessarily mean they're going to get let in, but they normally do. So I think a retracement is probably on.
Yeah, look, the one thing I can promise you with 100% certainty is I won't be buying here today. Full stop.
Yeah. Selling is off as well.
NS right now.
Yeah.
Got to wait. Right, mate. That's about us.
Thank
right?
you, buddy. That is us. Thanks, guys, for being in the room. Thanks for all the comments in the chat box as well. Good to have you in, Lewis, and thank you, Swee, as well. We will see you on Thursday to do it all again. Thank you, Marlon, for looking after us.
We will indeed. Thank you for being our trading buddies, everyone. And Ash, of course, thank you for being my trading buddy. Have a great week. Bye-bye for now.